This is Matthew Cratter from Trader University, and today I want to answer the question, why is Bitcoin falling? We're seeing quite a pullback in Bitcoin over the past few days. Ironically, it's just to levels that we first saw in Bitcoin's history last week. So this is quite a natural move. What's quite interesting about it, though, is that we're seeing it in the context of a lot of other risk assets pulling back. The NASDAQ has been extremely weak, especially some of the more volatile recent IPOs, for example, as well as every other cryptocurrency. Ethereum down almost 12% this morning, and Binance Coin down, call it 8%. XRP down 17%. So it's very important in this environment to know exactly what you own and to be comfortable with it. DeFi tokens are down even more. These are sort of high beta versions of Bitcoin and Ethereum as well. Now, what's been happening is that the 10-year note interest rates, especially at the far end of the curve, have been moving higher. And it's almost as if the treasury market and the fixed income market is tempting the Fed or testing the Fed and saying, at what point are you going to step in and start doing yield control, buying treasuries and keeping yields at the far end from the 10-year note all the way out to the 30-year note, keeping these capped. We live in a very leveraged economy that cannot withstand higher interest rates. Back there, you hear a lot of comparisons to 2000. Back in 2000, excuse me, interest rates were T-bills, short-term interest rates were at like 5 or 6%. Likewise, in early 2007. But we're really at a different point in history now, and every time these interest rates tick up, they increase the interest expense of the government, of everyone who borrows money, whether it's credit card debt, mortgage debt, car loans, etc. And it's quite interesting because when Wall Street needs money, it gets it in 24 hours. When the people need money, it takes Congress months. So part of this is just that the stimulus has been slow in coming, and the government's been dragging its feet. Interest rates are rising. The economy right now really is, the U.S. economy is like a heroin addict. We're never going to get away from the money printing and from the low interest rates. And this is what happens. We go through these cycles where people get a little bit too long and over leveraged. Interest rates tick up, momentum trades become crowded, cryptocurrency trades, Bitcoin trades become crowded, and then you get these liquidations. If equity prices fall enough, then the Fed panics and does more printing. We're seeing names, I meant to mention Tesla as well. Obviously, a lot of names like this that have been big winners on the upside now retracing. Tesla trading at 661 in the pre-market, which is, I believe, below where it was when it was first included in the S&P 500. So quite a big retracement. The reason, this is why it's very important to understand the fundamental backdrop of what is happening. We have U.S. federal tax revenue for the last 12 months at about 3.5 trillion. The actual spending that the government's doing is 8 trillion. And this gap is called the budget deficit. This needs to be made up for by the Treasury issuing debt, which are U.S. Treasuries. There are not enough buyers for these Treasuries at very low interest rates. A lot of the corporate buyers have disappeared. The bank balance sheets are pretty stuffed. And so the Fed, the Federal Reserve, which is the central bank in the U.S., is really the buyer of last resort. There's no way when you have debt as such a high percentage of GDP that the U.S. can ever recover from this and actually generate enough tax revenue to cover this deficit spending. So what we do know is the Fed's going to have to keep stepping in, expanding their balance sheet, increasing the money supply, and propping up asset prices. We may have some more insight into this after Chairman Powell testifies today. The market, it's almost like testing him by selling off before this testimony. In this context, it's obviously very important if you're trading momentum stocks to be observing your stop loss levels. And if you own investments, especially cryptocurrency like Bitcoin or some other cryptocurrency, it's very important to understand what you own, understand whether you're a trader or a long-term investor or hodler. if you own something like, I'll skip ahead here, if you own something like XRP, which the parent company is being sued by the SEC, and now they've announced that their major partner has pulled out. This was actually a partner that Ripple bribed every quarter by giving them free money in order to use their products. This is an interesting kind of company where you have to actually bribe your customers to use it. But Ripple falling sharply as MoneyGram pulls out. Also, some of the Bitcoin forks, the fake Bitcoins, like BSV, Bitcoin Satoshi's Vision, which has nothing to do with Satoshi's Vision, and Bitcoin Cash, Bcash, BCH, and BSV are the tickers, have been delisted from OKCoin for they're trying to prevent people from being misled about what the true Bitcoin is. These are two failed forks that have just tiny market caps. BTC is the real Bitcoin. But my larger point was you have to understand when times get tough like this. We've had a very easy, I'd say, month and a half in crypto and in momentum stocks. When times get tough like this, this is when you need to really understand what you own. If you own XRP for the momentum because you think you're going to be able to outperform Bitcoin and then trade into Bitcoin, good luck with that. I think it's a very bad strategy. If you want to own BTC or Bitcoin, you should own Bitcoin. That being said, it's very normal to have these sort of pullbacks. And if you understand the beauty of Bitcoin's engineering, the beauty of the software, and the beauty of the entire ecosystem of nodes and miners and developers and hodlers and very large institutional investors that are never going to sell, people like Michael Saylor, things like the Grayscale Bitcoin Trust, which is really a black hole. Once the Bitcoin goes in there, it can never come back out again. When you understand these things, you're actually very happy when you get a pullback. And we've been seeing these long candlestick wicks at the bottom of these sell-offs in Bitcoin especially, showing that the buyers have been stepping in. I was actually buying some more Bitcoin this morning. I was afraid that I was sad because I thought I'd never see prices like this again. But fortunately, we've had this pullback and I've been able to buy some more. But this is a chart of the last post-halving, the 2016 halving and the 2017 bull market. And we can see that even in the context of Bitcoin, I think it went from something like 1,000 to 20,000 during that cycle. Very large pullbacks. I think we're down about 16% off the highs right now. And we can see here that the pullbacks in the previous cycle were much, much deeper. I think what's different now is you have companies like Tesla and MicroStrategy and Square and some of the Bitcoin mining companies that may be buying this dip, or at least not selling as many of their Bitcoin. If we take a look at the 2017 bull market and the 50-day moving average, which is the blue line down here, we can see that in spite of the huge run-up, really, as I said, from about 2,000 to 20,000, there were times when we pulled back below or touching the 50-day moving average. So this sort of volatility is very natural, and what it does is it shakes out the weak hands. We've had about $2.5 billion in Bitcoin longs liquidated in the last 2 days. This is why it's important to know what you own and also not to own it with any leverage. Or if you're going to do leverage with Bitcoin, do a very small amount, because a 10% move, if you're levered 2 or 3x, can become really quite large. We've seen a similar liquidation in the futures market as well. 474,968 traders were liquidated. This is why it's very important to understand what you own and not to trade it with too much leverage. If you own something like XRP and you know it's a sinking ship, you better have a really tight stop loss. And this is why I think it's not, at least for me, it's not worth it to own these names and try to pick a faster horse. I much rather be able to sleep well at night and be really calm, hold my own private keys for my Bitcoin. No one can take them away from me. If Coinbase goes under, or Binance goes under, or Kraken or Gemini go under, my coins are not stuck there. They're in my own private possession. It looks like the more good news here, the Tooth Fairy has begun to distribute Bitcoin. This is from a friend of Matt Odell's. It looks like the young kid got 9,000 sats or Satoshis from the Tooth Fairy. This is, there are 100 million Satoshis in each Bitcoin. I thought this was kind of a cool idea. Also wanted to point out this interesting tweet that the Justice Department, I'm not sure exactly where I believe it's being held at the Justice Department, but maybe it's being held in custody at the Treasury. Basically, the U.S. federal government is holding 70,000 Bitcoin. They haven't auctioned it off yet. These were Bitcoin that were seized related to the Silk Road seizure and some corrupt federal agents that were working on the case. So very interesting that the federal government, I believe it's at the federal government, at the Treasury. It could possibly be at the Federal Reserve as well, but they're holding 70,000 Bitcoin worth $3.6 billion. So it'll be interesting to see if they ever auction this off or whether this is just a starter position for them that they begin to scale up. Just want to remind you of the larger context here. This is the stock to flow chart that we follow, Plan B's model. This is actually the less bullish model. This isn't the one, the cross asset flow model, which gets you to $288,000 by the end of the year. I'm looking for $200,000 on Bitcoin by the end of 2021. But this is a more conservative version of it, and you can see that in previous bull markets, we pulled way above the line. The blue line here is the model price. And in the real run-up phase, we got quite far above the line. That really hasn't happened yet. We're obviously right here now. If we look at the model price, this has us moving toward, call it 80, by the end of this year, approximately 86, 87 $1,000. I think this is too conservative, but even if you think that this model is the right one, you can see by 2025 you are at close to $1 million, $989,000. So there's really no other investment out there where you can go from 50,000 or 40,000 to $1 million in just a few years. And again, I think this is too conservative. I think stock to flow may prove to be too conservative simply because in its history, we never had these big purchasers of Bitcoin like MicroStrategy, Michael Saylor, Tesla, etc. And I think this fundamentally breaks the model, but it breaks it to the upside is the good news. So when you understand these things, days like this become very happy days. I'm very happy to buy when longs, especially when leveraged longs are being liquidated. I think that's a great entry point. It's not to say we can't pull back more. We could certainly pull back to the moving average line to about 40,000. Wouldn't bother me at all. In fact, I'd be very happy to pick up some coins around $40,000. The big first principle that we need to keep in mind is that Bitcoin has a limited supply. There are only 21 million Bitcoin. A lot of these have been lost, so the actual supply is much lower. A lot of them are locked up forever in GBTC or in Michael Saylor's cold storage wallets. And there's an unlimited supply of fiat to buy this limited supply of Bitcoin. Wall Street's on board. All the institutions are on board. The U.S. government seems to want Bitcoin to go higher for some bizarre reason. And as such, Bitcoin, I still think, is really the place to be. And this is why it's so important to understand what you own. And that will give you the comfort you need if you're interested in buying the dip. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.